Hey everyone, and welcome back to Lunch at the Market. It would be tough to have predicted today after the weakness we saw yesterday when the Dow plunged 70 points on the open, only to finish down just 10 points or so. Selling this market has been the wrong move for years now, outside of seasonal weakness in the summer, which we are hedged for via our May VIX call spreads and SPX put spreads. Speaking of selling, wow, is Molycorp being sold? There are several articles that came out today talking about the rare earth space. As an article in Bloomberg told us that Sumitomo Corp and Mitsui and Company are in talks to mine rare earth deposits in Russia as the country seeks to compete with monopolist China. Another article, this time from the Bedford Report on Yahoo Finance, talked about the possibility once again of a bubble in rare earth stocks as mines outside of China are far from coming online. Either supply from other companies or the repeated mention of a bubble in these stocks may be hitting MCP today. We've been taking off the March 50-55 long call spreads, thankfully a very small position left in there at this point. The gains on the rest of the position will insulate us from any losses we may have to take on the remainder of the position. The critical number is 46. That's where the short side of some of our put spreads are. As long as MCP holds $46 by next Friday, then we'll be just fine. Keep an eye on this trade if you're in there with us. We will not do anything today, but MCP is on a watch to be sure. We want to get the 2 days of free theta we'll collect over the weekend with no trading. When we come in on Monday, the spreads we're short will be worth less simply from time decay. MCP briefly hit about 55.63 or so before turning the other way and going back down. This may be a perfect candidate for an iron condor, as the stock has now failed twice and is putting in lower highs. If the $48 level holds a line of previous support, then this may end up being a blip. Otherwise, if the 48 and 46 levels are breached, we could be looking at $40 for a stopping point, about 20% down from here. Finally, if a channel forms, the bottom support of the downtrend will not be until the mid-30s, so please be careful playing the stock and watch your position size. We talked to John Thomas, who writes the Mad Hedge Fund Trader newsletter about gold. It's been the bane of our existence since the calendar turned to 2011. What we didn't know about was that in addition to the sell-off and profit-taking that we saw as a result of gold being overbought, there's a scrappage issue. If you're like us, then right now you're wondering, what the heck is scrappage? Simple supply and demand means that the tighter the supply, the more we should expect gold to go up. Well, all the companies on television endlessly and in Kmart's and around your neighborhood have brought gold supply onto the market via scrappage. It's kind of like the steel glut we got from cash for clunkers that held stocks like NUE down because of overcapacity in steel. The further we get away from cash for clunkers, the easier it is for steel to be taken off the market and supply and demand to go in favor of steel companies. As the scrap gold clears the market from all the companies paying people under market value for jewelry, the supply for gold will again begin to tighten, driving prices up. So, even if demand remained constant, which I tend to think it's risen due to the current fiscal monetary policies of countries around the world, good and bad, eventually, when supply comes back down, we depend on getting new supply out of the ground. It would be very supportive of gold prices. The marginal supplier of gold has been largely eliminated. As the world improves, fewer people would be willing to let go of their gold to pay for things. Also, the gold supply in the hands of those who would sell it has decreased dramatically since 2008, meaning there should mean the possibility of a big supply shock increase becomes much less likely for another, say, 10 years or so. So, while we hate gold, there may be a trade there. We're committed to our positions in GDXJ, BVN, and FCX, although that's really a copper play for us. We'll manage them to profitability, but we may find out that the supply and demand story that Jim Cramer has been preaching for many months now might just be true once again as the supply overhang from scrappage is resolved. Thanks for tuning in again today. Hope you took advantage of the weakness in Akamai, aka AM, yesterday to get some long exposure, or at least sell some puts. There's something to be excited about with MCP holding that $48 level today like it did. Twice the stock tried to break $48 only to jump back above it. Keep in mind that the worst case scenario outlined above doesn't currently exist and there is no current down channel, but it's important to think about what can go wrong in your portfolio, as the winners tend to take care of themselves. Be careful out there, only 1 week left until OPEX. Have a great weekend and we'll see you on Monday.